Hello and welcome to the day ahead. It is Wednesday, June the 29th. I'm Andrew Gagan. Well, to the action overnight, and Wall Street reversed recent gains amid a broad sell-off, with the latest reading of consumer confidence showing sentiment continues to plunge, fueling fears the Fed's aggressive rate hike could tip the US economy into recession. The tech-heavy Nasdaq was the worst hit, while the benchmark S&P 500 is on track for its biggest first-half percentage drop since 1970. Stocks specifically, big tech led the losses. Apple, Amazon and Microsoft all down, with Microsoft facing investor calls to publish tax data. Meanwhile, shares of Occidental Petroleum rose after Warren Buffett's Berkshire Hathaway increased its stake in the business to more than 16%. It comes as energy stocks benefit from rising crude oil prices, despite claims Saudi Arabia and the United Arab Emirates are producing near capacity. Elsewhere, Nike shares plummeted following lingering worries over demand in China. CFO Matthew Friends saying, "We are taking a cautious approach to Greater China, given uncertainty around additional COVID disruptions." Well, US consumer confidence has fallen to a 16-month low as stubbornly high inflation prompts fears that the economy is slowing to the point that it could tip into recession. However, negative sentiment hasn't put the brakes on spending, with the Conference Board survey revealing consumers' plans to buy motor vehicles and white goods are actually increasing, although record high fuel prices have curbed plans to travel. Consumers' short-term outlook for income, business and labour market conditions were the weakest since March 2013, which the Conference Board has interpreted as suggesting weaker growth in the second half of 2022, as well as the growing risk of recession by year-end. Meanwhile, San Francisco Fed President Mary Daly has said many are worried that the Fed might be acting too aggressively and maybe tip the economy into recession. But she says, "I am myself worried that left unbridled, inflation would be a major constraint and threat to the US economy and continued expansion." While New York Federal Reserve President John Williams said, "We need to move expeditiously." Well, the latest economic data shows the US economy remains resilient for now, with the goods trade deficit narrowing significantly in May as exports hit a record high. Wholesale inventories lifted 2% in May. However, the Richmond Fed Factory Index fell from -9 to -19 in June, and the S&P Case-Shiller home prices rose a less than expected 2.3% in April. US Treasuries were little changed, while most major currencies were weaker against the US dollar. The Aussie is currently at 69.3 US. So the local share market is set for some selling today, with ASX futures currently off 1.2%. Oil prices have risen for a third consecutive day on the prospects that Saudi Arabia and the United Arab Emirates will be unable to boost output meaningfully, just as G7 leaders look to cap the price of Russian oil. Brent crude rising 2.5%. And signs of a relaxation of COVID restrictions in China has helped the iron ore futures price higher, while base metal prices were mostly lower in response to depressed consumer confidence in the US, copper down around 0.7%. And the gold futures price fell slightly. And the crypto market has extended losses, Bitcoin falling back towards $20,000 US. Well, locally today, we get the latest reading on retail trade, which is expected to have slowed as Australian consumers rein in spending as the cost of living soars. And that is your day ahead. We'll see you again tomorrow.